Hello, everyone. Hope you're well. And this is the week 26. Can you believe it? Week 26 Zoom call with Hay2Brick. And I would like to, let's see if I can do this. Probably. And hi, everyone's on Facebook and Zoom and on YouTube. And thanks for keep joining us on this Wednesday calls. And this call are meant to be keep you updated what we're seeing out there on the market, how we are actually in terms of Hay2Brick investing, our teams, our management, how do we actually look at the market? What are we looking at? How do we buy? And it's meant to be keeping everyone up to date. So hi everyone on Facebook, and wish you all well and wish you all have a happy Wednesday. Then if you guys miss me on the slide, want to see it on the Zoom, you guys should actually click the link on the Zoom call, and then you can just join and see the slide. But long story short, our story is really simple. We started investing in Canada and US, and then and slowly in Hong Kong, and then in 2006, that's about 14 years ago. That's our firm, and we first entered the USA market in 2012. And that's the time that we say, oh, the crazy market is really crazy in the US market. And that's the time that we say, you know what, that's the time we have to go in. And I would say there's a lot of synergies, there's a lot of similarities when we are seeing the markets out there right now. There's a lot of fear, there's a lot of uncertainty. You know what, that's the best time to ask the best time to learn how to do this. For all you guys who is on Facebook, on Zoom, and on YouTube, if you're thinking of how to learn investing in real estate, that is the best. Today is the best time to learn. So that's why I set up a call like this. That's why I set up Zoom meetings like this, because I want to share what I've learned over the last 15 years, and plus, and as I keep doing it. The funny thing is, more people want to join us. More people in terms of investors want to join us. More people in terms of the managing partners want to join us. So this team is getting bigger and bigger. So I'm very, very. This is the most exciting time for Hay2Brick. What is the investing? And you know what? There's no better time to do it other than right now. So we had investing in multifamily since 2016, and we have done really cool thing. And on our first investment projects, which going for a little bit of, we increased the equity almost 70% in terms of investing with investors. We have pay invest from day one. And that's really something that we're really proud of, and something we really uphold ourselves on. And we haven't missed a paycheck. We haven't missed the distributions. Our investor can attain to what I'm saying. I can't even lie in the broadcasting. So we uphold to what we said, and we doing what we said we would do. That's really key thing. So hey, Franciska. So here, let's do this way. I don't know if my Can you see me now? Hope that is better. Is it good, Francesca? Let me know. But yeah, the key thing is you really have to do it on a long-term game. And let's do this. And we have started doing this since 2006, and we have been doing Zoom call. Zoom call is the same. We have been doing Zoom call since the beginning of the pandemic in March, and this is number 26 of the meetings. And thank you for people like Francisco and other people who have been keep joining us on Zoom call and meetups. But the key thing is this. The key thing is about consistency. No matter what you do in life, you're gonna need to show up, whether that's gonna be one people seeing you, or there's no people seeing you, or there's 10,000 people seeing you. And you have to keep consistently showing up, and that's what I learned. So number 26 call of the year, Zoom call of the year, I've done 9 meetups so far and 30 meetings, and that's probably 35 meetings now, and over 1,000 people, and I've been able to in touch with, and I've been able to have the honor to speak with. But today's Zoom call is about a few things. Today's Zoom call is about a few things. I want to give you guys an update on apartments investing. I want to give you a little bit of buying philosophy, what we're doing through right now when we have COVID, and how we buy. And I'm going to summarize it. Strong management is the key. No matter what we do, strong management and strong value propositions and solid market research and providing the return that we say we're going to do with investor is the key. So why we want to learn about investing in apartments, really quick and simple. You want to retire with cash flow. You want to retire with passive cash flow. This is more important. Our investor has not missed a payment from day one. Something we're really proud of, and we continue to do this, and something that we keep in mind very, very dearly. Hard asset, unstabilized return over time, and apartment B and C is what we're looking at. And the secondary market, where a challenging time like this, that's where you're going to get a lot of deal flow in the next 3 to 6 months. I've been saying this for about 4 or 5 months now, and I'm getting the at the beginning. I remember it's like, I was looking at the market. I think the gut feelings is like everything is going to correct it. It hasn't corrected as much, but we're seeing the market is going to the right directions. We're seeing single-digit decrease on the prices when we talk about buyer and seller, when I'm talking to buyers, brokers. And I just talked about our last portfolio increased 50% during the last 18 months. So our buying philosophy, Hay2Brick buying philosophy is very simple. And create value from the start, buy right, create values through asset optimizations, cash flow from day one, generating revenue for investor from the get-go. Don't ever miss that point. Investor invest with you for a reason. They want cash flow. Give it to them. Give it what, this is number one on partnership, every partnership. Give something what they want in exchange of what you want. It's really simple. And what we uphold is earn up to 15% simple interest for 5-year hold. Very, very simple. Don't ever complicate the formulas, because investor want return, investor want stability, investor want something that's backed by asset. Give it to them. Strong management. When you're presenting to other people, other investors, strong management is really the key. Buy as a solid market. Close to major hub. And in the next 6 months for Hay2Brick, pricing, we're correct. This is what we're seeing it right now. Why aren't you correct? Once the PPP money stand for the paycheck replacement program in the U.S. will dry it up. We know that already drying up, and it is already drying up. Many existing owners were looking at exit. We are seeing it a lot of that right now. And our existing network on deals flow, we benefit since we have been building this since 2006 in Midwest. We have been saying that again and again, the tsunami is coming, the eviction is coming. I'm seeing in different kind of asset. Some asset has not been managed as well. I'm seeing it already. I'm seeing it in different market. I'm seeing it in A, B, or C market. I'm seeing the other on the other asset. But apartment is proven. It's proven in such a way that if you're looking at 2008 and you look at all the asset class, residentials and the office and everything, apartment were very resilient. We've seen it again and again in this correction. So will it change anything? No, I don't think so. But what you're telling you is, when you tell investors, when we approach investors, that's what we're telling them. You know why we invest in apartments? Because it's solid, it's stable, it's cash flow. When you buy right, when you have strong management and you look at the right market, have the solid things, we check all the boxes. When you look at apartments, you are going to succeed. You're going to succeed. So I've been doing this Zoom call one single reason only. Hi, Joshua. And one single reason only is you can retire. You can absolutely retire. You can absolutely retire when you do the right thing. When you do the right thing, meaning you are going to find the investment with cash flow. You're looking at building a relationship with the brokers. You're looking at building the relationship with your investor. You're looking at building your team. You're looking at building the company with around the people who say that, I want to do this with you. So I see some friends in Hong Kong. So thank you. So this is a really key thing. When you're looking at why I'm doing this Zoom call with people, that is, that I have a strong management team after all these years now, but you have to look at this. It's really crucial. By asset, and you can invest in something that's a big asset that have a solid footing, revenue from day one, as I said already. Are you going to invest in single family, or you invest in other things? That's your choice, or invest in stocks. But the thing is, we know we are super confident in what we're going in right now in the apartments into the Q1 and Q2 next year. Because you know what, there's going to be a lot of deals going through in the market. There's going to be a lot of existing owners who's going to have problem because unfortunately, you know, the government has just put on an eviction ban until the end of the year. So guess what? All these apartments, if they don't make money continuously, they either going to be need to sell or you can hold on. For the owners that doesn't have a big war chest, they're going to need to look at exit strategy. That's where we come. That's where we come, and that's where we're targeting right now, getting deal flows. So for 6 points, put in 7 points here. Like, you know, why I invest in multifamily. Maybe it's different for you, but I don't know. But this is my reason. If investors are going to invest in single family residential, they're ready to jump into apartment commercial. Much easier because you can cash flow, you can hedge, and you have less headache. You have someone to manage it for you. Why not? And cash flow is much better in single family. We're going to talk about it many times. And we're going to go over it again. But you know what? You cannot cash flow if you own a single family and one of the tenant, the only tenant, move out of the building. You cannot cash flow. And equity is much better. And I'm just finishing. I just finished it. I just finished it. My refinance last week, and we're really happy. We are working with investors. We are going to be investing in next project and give them up to 15% returns. If you're in for 5 years, if you're in for 15%, if you think that was good for 15% annually for 5 years, you should join us. You should join us because you know what? There's no other way to get that kind of return, honestly. There's no other way to be able to get that return if you're talking market. And if you pay attention, you know, Tesla may go up like substantially and then come down. Same as after the market. You won't get that when your asset is backed by physical asset. If your asset investment is backed by physical asset, providing you cash flow, providing you revenue from day one, where's the investment in the world where the bank would come in and say that, you know what, I'm going to lend you 70% of the dollar? This is the biggest secret in history. Can you find some asset in history that the bank is going to say, you know, if buy this 100%, I'm going to give you 70 or sometimes 80% of the money? I can't find anything other than real estate. And they're not only giving to the big and small investors, they're giving to individual investors like us, media investors like us, to able to find those good deals. And some of you guys saying that, you know what, I want to put our money on other things, on other places. That's good too, because you know what? There's so many ways we can make money, so many ways we can put our asset. But all I'm saying is, if you're only investing in stocks, if you're only investing on bonds, they're giving you what, like, you know, 0.5% in US and keep going up, you know, look at the 10 years bond rate. That's where it is. You're not going to be able to make a lot of cash flow. You're not even going to make enough money for you to, for your asset to become eroded by the inflations. That's what I'm saying. But that's why I'm creating. That's why I've been creating things like this. That's why I'm creating costs like this. We look at like this. This is the cost I created 2 months ago, because you know what? I decided, you know, a few years back, you know, I don't know how to invest in apartments, and I have no idea how to do that. And sooner or later, I figured out if I want to buy something big, I have to learn that. So I go to US and basically, you know, follow someone really successful and learn it from them. I learned from them how to do it. So and then after years, after I've done it, I create something that on my own, so that for my people who have access of cheap educations, easy educations, value, let's just say that value education. Because I believe in, if you want to spend $40,000 on some education course, you can, but not everyone have $40,000 when I started. So I create something very inexpensive for my investor to learn, to partner, to actually learn how to buy multifamily, research it, get the money that you need, learn how to raise the money that you need, and learn how to manage it you need. And something very simple. But it's come down to this. And I basically give you, you know, the secret in front of you. You're going to say, you know what, this is crazy, but you know what? I spend this system when I learn on this, you know, when I pay the big check. So you learn how to research, first of all, you know, partner with real estate broker, learn how to research when you ask them, and where's the market to invest. When you ask them about market research, so many brokers, that's very intelligent, and they do all the hard work for you because they know the market. And that's the job. That's the number one job. They come in the office every week, 40 hours a week, learn how to market, learn how to do the research, learn how the occupancy is, learn how to do the investment. So all this thing, they're gonna give you away for free. Get me wrong. If you go to Cushman and Wakefield, if you go to Marcus & Millichap, they have tons of marketing research. If you go to CBRE, they have tons of marketing research. It's available for everyone investor. Just go there and look. Where's capital? I talked many times. If you don't have capital, you're not able to buy properties. Period. Strict and simple. It doesn't matter how much you know. It doesn't matter what deal you have. If you don't have capital, if you're not doing your raise for your money, it doesn't matter what deals you have. And then you have to build credibility. The reason why I'm able to partner with strong people and management team who have experience on the upswing of 10,000 units and have a strong real estate heritage. The reason of doing that is because I created my own credibility. With that, I'm able to partner with those guys. And I say that you same to you guys. Like that's kind of tied back to creating a team because you're not able to do everything. You know, I may be doing Zoom call right now, but I can't do everything. I can't be managing my properties and I cannot be raising capital. I cannot be doing Zoom call and meeting investors and doing it all at the same times and flying to US all the time. So you have to create great teams. You have to create the great, strong teams that you can trust. You can offload some of the things that you're not so good at and still own 100% of the whole thing with the whole team. So that's the key, you know, give up something that's so willingly so that you can build $100 million company, a $1 billion company, $10 billion companies, whatever that your goal is, create a team so that you can leverage on and be successful along and with the team. Negotiating great deals. I have one negotiator of, you know, negotiations master. I couldn't say that. He wouldn't admit that word, but basically you have to be a negotiator. I may be really good at, you know, doing Zoom call, but I'm not a good negotiator. I'm not as good as him. So I'm going to partner with him and get him to negotiate a good deal for me and give him something. Underwriting strategies. So this is something that I'm really good at. This is something that my other team is really good at. So again, build a team, and you're not going to be able to do all this by yourself, by the way, but you need to do bit and bits. You know, you need to know how to do your market research. You need to know how to raise capital. You need to learn and know a bit on every part in this diagram, in this table, but you're not needing to be the expert. When you build a team, that's a build of things. It's going to give them, you know what, you're going to underwrite this. I'm going to look at that. I'm going to make sure that what you look at is right. And I'm going to focus on other things. Maybe I'm still focusing on the Zoom call. Maybe I'm focusing on raising capital. And then, you know what, learn to lead. Again, it's come back to when you build a team, you need to learn how to manage your people. And at the end, financing, you know, you have to have really strong mortgage broker. And on my meetings, on my Zoom call, I previously invited one guy that is very strong in Canadian field. So you have to create those connections, you know, build your team, build credibility. But, you know, as I said, I want to give you guys a little bit of updates. You know, what is going on in the U.S. HEROES Act, $3 trillion legislation passed by the House, and it's likely to pass more. But they're saying that, you know, the House and the Senate right now is going on this, like they are fighting on this, whether they're going to 650 millions or a trillion worth of package additionally going to the people who are actually no work. And even though, you know, the unemployment rate has gone down, but the truth is, they don't need me to remind you, millions of people are not at work, and we are already seeing it. You know, the effect of the pandemic started in March, but we're already seeing the pandemic effect. It's coming down, you know, in different market, New York, San Francisco, and even some of the Midwest market really seeing it. The effect is, you know what, they're also passing another act that, you know, that you cannot evict tenants until the end of the year. So all this creates a lot of stress. So what we're going through is, you know, the market is going to correct it. It's set to correct it. So you pay attention, read a lot of market research, you know, even though you're not investing in a hotel, I'm not investing in a hotel, read a lot of different material, because all these things is intertrajectory. They are affecting one another. That's like a big machine, like in economy's sake, it's going to be affect one another. So look at that. If they're not printing more money, if they're not giving the money to the tenants, well, the landlord is just no secret. There's no rocket science. The landlord is going to get less in terms of rent. So, and I want to put this. All right, I saw this slides and I basically kind of copy it down here, and it's very interesting. Most recent employment report showing that 1.4 million get back to work, and the nation have lost 11.5 millions of jobs since February. And the numbers may be rising, maybe coming down a little bit, but you have to really important. All these things have to come down to if they are printing money continues or not. The reason why we have a really solid summer, well, solid summer in terms of there's not a lot of price adjustment. There's no secret that in terms of everything is affected. Hotel affected bigly, and we're already seeing a lot of hotels is actually go on beating website, and office is affected, retail is affected. They're slowly getting better. But the thing is, you see this, and sooner or later, that if we have, let's just say the economy of 10 cylinders, you have high tech, which is doing really well. You have utility, food services really doing really well. And you have everything for the rest. You have airlines, it's not going that good. You have real estate doing so. You have like, all the industry not doing good. You have so many other industry that's doing not good. You figure it out, you tell me if this is like business as usual. You tell me if the market is going to correct it or no. I think that's a really big opportunity. We're going to Q1 and Q2 when the when the landlord cannot sustain the payment, when the landlord is only getting 40-50% of what they were getting before the March and before the February. I think that's where the opportunity comes. So but don't get me wrong, listen and watch all this research, educate yourself, partner with great smart people. Then if this is really one key thing about partnering. You may not be the best on everything. No one's the best for everything. And that's why I'll say so many times, partner with strong, smart, intelligent people and give them part of the share. And that's the greatest way that is the fastest way, actually. That's the fastest way to get to become rich. And capital alert again, industry is facing significant challenges in terms of incomes. That's no secret. That happens all over the board. And what is office with Canada and the US, and I don't know about the Europe market. I think it's very similar, right? Because people is not going to go to job. But in terms of apartments, in terms of office, in terms of hotel, all these things is affected. So you're gonna get you're gonna see a lot of deals. Retail performance continue to choppy. The thing is this: when you go to the shopping mall, and that, like I go to shopping mall every now and then, I just want to see how they are doing. I see so many empty stores. I see many business kind of come back and doing better. But mainly, if you're in retail, how that goes. If you're office, how that goes. I went to my office yesterday. Used to have 20 different individual companies, and now they're up down to 3. I don't know how. If you look at the report and you say that the market is right, it's good and fine. I really don't know what kind of report you're looking at. I'm just looking at my informal report. We've looked at 10, 15 companies that were doing fine before, and talk about the oil country here, and now we have like 3 companies. I think it's pretty bad. I don't know what you think. I think everything is going to go for really big corrections. And meanwhile, the decline in travel, that's another really strong. Airlines is going to trouble for so many people, and the travel industry is going through a big major restructurings. And French ratings forecasting 5-year timeline for revenue to rebound. Well, I don't know. Like it is very interesting time. So what I'm saying is this: get ready for building your time, building your team. Get ready for getting a deal flow. Talk to your brokers. There's some brokers on the calls. I've noticed that, and that's they are the one who are able to give you the information on the market. Don't build one market. Build 10 market. Even though you're not going to invest in 10 market. Even if you only invest in apartments or retail or other things, don't look at just one type of investment because they're interrelated. People, if you're trying to raise capital, if you're telling them that you should invest in apartments, they're gonna ask you why. Why not invest in hotel? Hotel is such a good price, and you have to be able to be fluent enough in terms of the language that you can explain to them. This is the reason why. And it's really simple. I think there's going to be a lot of opportunities in all type of asset because we're going for a big correction. The question is, how much of a war chest that you have? Because if you don't have a big war chest and you're buying a hotel at, let's say, 50% from the price that you have from a year ago or 6 months ago, and lately the rents coming in for hotel, they're talking about 20% to 40%, depending on the way you at. How you're able to pay all the bills war chest I'm talking about. How are you going to pay all the bill and losing all the money before eventually all this price will go up eventually, I tell you. Because people is going to go back to normal life. People is going to go back to the office sooner or later. But how much of war chest you can stand? It could be 2 years. It can be 6 years. So would you rather put your money as investors, especially if you don't know about different type of asset, in something that is like performing right now, may correct a little bit and still providing cash flow, and believe in a strong team that, you know, whoever that you're working with, or you invest in something that is like a gamble. If you're a gamble, maybe just go to casino. But I'm very excited because I'm in the middle of building a strong team. But at the same time, I told you guys that I launched a home study program. Over 250 people have subscribed at first, I should say 6 weeks, because I haven't updated that. But you know, it's come down simple. Finding emerging market, creating deal flow, raise capital, investing with creating a leadership team, underwriting correctly, and know how to do the due diligence financially, legally, and financially, legally, and physically, and financing a team with a mortgage broker, and then managing is such things that you have to be continuously doing good at. And if you keep on doing what you do and building a team and raising capital, and you know, it's funny, like, you know, I get so many people and talk to me. It's like, why you don't invest in Canada? You know what? I have a guy who's a strong management team within our organization. He used to manage close to 10,000 units, and he can't find good deal in Alberta. You tell me whether you can find good deal in Alberta. When it's a good deals, I'm talking about like, you know, 160,000 per doors in Canada. And I know a lot of investors, you know, that don't believe in US, don't believe in you can buy 30,000 per doors. When I show him the 40,000, 30,000 doors per doors, like, I mean, 40,000 per doors in US, and versus 160,000 Canadian in Canada and Alberta. And if you talk about that, it doesn't take someone who have years of managing experience managing 10,000 units to figure out that that's not much opportunity in Canada. So having said that, I still love Canada. I still love where I live. But this is what we're looking at: right market, right deals, execute it, refinance, and that's what we did. We just cash flowing. We just actually we just received a big cash flow check of 400,000 last Friday, and we're going to reinvest. Whoever want to invest, let me know, and I want to partner with you. We, as I said, we provide 5 years old or 15% returns, simple interest. And this is kind of debate, but the strong thing is we know the market. We have someone who have great, strong management values, creations, and I love you all. I want to say that, you know, I'll keep this short. This is this week of the weekly Zoom, and hope that see you all. Thanks very much, and wish you well. Happy investing, and keep going back. Thanks for joining us, and wish you all well. Cheers, guys. Thank you very much, everyone. Thanks, Kingley, Lloyd, Rosanna, and Shine. And I see you all, and hope you guys well.
Thank you. Thank you. I haven't had time to communicate with you, Howard.
Is it Kings? Sorry, is it Kingsley?
Yeah.
Kingsley, hey, how are you doing?
Yeah, I'm good.
Are you in Calgary, right? Are you Calgary, right?
Right now I'm not in Calgary, but I live in Calgary. I just left about 10 days ago, so I'm doing a quarantine. I work in.
Sorry, where are you right now?
I'm Abu Dhabi.
Oh, you're in Abu Dhabi.
Yeah.
Are you from there originally?
Sorry?
Are you from there originally?
No. No, I work here. I work in oil and gas.
Oh, you do. How is the Middle East well?
It's really bad everywhere. Trying to get out of this. The industry is down, really down. So trying to find investment and get out of this oil and gas.
well, you know, it's I'm always looking for great people, looking for great team, and if the time zone difference is not too bad, we should find a time to chat and see how we can help each other.
Yeah, I should be back in it doesn't work well again.
Yeah.
So hopefully, I think I'll be here for about 2 months. But I mean, we can talk. Time difference is just it's 10 hours.
You have my email, right? Send me a time that
Yeah. I get your emails.
Send me emails and we get on Zoom call. I'm looking forward to connect to you.
Okay.
I don't think I don't think I met with you in person. No, I don't
No,
think
we
so.
haven't. No, we haven't. The pandemic messed up the whole thing. I was here in January. I got stuck.
Well,
Then I got back home to Calgary in June. Then I stayed and then I left this September first week.
well, let's get on the. Let's talk in private. Let's talk in private. How you doing?
All right. No problem.
You know, I
Right.
come from oil and gas industry, so yeah, I know how you're experiencing it. But
yeah. The first time you said it, I got interested. I got more.
Yeah, no.
More than half of the oil and gas workers are out of jobs, so most people never never had plan B, and now everybody's suffering.
No, it's
cuts. The salaries have been cut. I mean, people have lost more than 50% of their income. That's if you have job, because more than half already laid off. So
it's not like ultimately it's not sustainable.
Everybody's trying to leave, not even like go and come back. Everybody's like, okay, that's it.
Hey,
all right.
What does they love you? So talk to me if you want to invest.
Yep. All right. All right. Cheers.
And thanks for joining, Corey. And thanks, Ryan. See you again. And ciao. Let's talk next week.
So Howard, sorry, I'm going to just few questions. You mentioned something about the Canadian markets.
Yeah.
Is it just Alberta or the whole of Canada? Because I'm thinking the guys in Toronto are still okay.
Yeah.
Is it just Alberta?
Like, you know, when we investing and look at investing in the medium to big scale,
right,
it's all about cash flowing. When we look at investing, it's not only about appreciations, because appreciation it's when looking at, because I used to invest in single families, so I know what guys are thinking and girls are thinking. You know, if the market keep going up, that's pretty good. The truth is, when you buy something at such a high price, expensive price, you just cannot make money. Honestly, like you just cannot make money.
Oh,
like if you're buying a home at $500,000, like how much of the rent you need to make money? You probably need you need 50,000 a month, which you're not gonna get. Like
which you can't get that. No, you cannot.
The price need to be cheap enough to sustain that, and that's why I go to US. There's no way. There's no way in Canada that can give you that.
No, you can't. Yeah.
Because
from rental, no. Even in Toronto, you cannot get that. The return is not high. People are only Toronto. I think it's just people are looking for appreciation only.
And you know what? That the risk is really high in Toronto and Vancouver.
Yes, that's true.
It's like it. Is the question is like I would answer, how many can you buy? You may be able to buy 2, right? Like like and then you put all your money in that 2 properties. One. No, I'm sure be more realistic. Maybe that one, and then you watch that in the hawk. But the thing is, there's nothing you can do. If it go up, then you win. If they come down, it will lose. And the question is this. This really comes down to what goes up must comes down. What goes down must comes up. And not saying that it will come down like this year, but the thing is, the risk is just really high, right? When it goes to really high, and it comes down to supply and demand. I get it, but if you can just buy one, I don't know. Like how much can you cash flow right now if you're not appreciating, and if there's no way you can put an appreciate meter next month, you're not getting cash flow like apartments. Like that's the reason why I'm investing in apartments.
Okay. Anyway, we'll talk about this because I've got questions to ask as per tax, the implications if you're in Canada and you're investing in US, how to file tax and all that. That's the other question I'll ask maybe in private.
Yeah, no, I think it's probably more appropriate for we want to keep our conversation in privacy, and we'll talk about those kind of things. But
Okay.
Let's schedule something maybe next week. And then I get on my partner as well. My partner is actually very good in kind of this kind of call, and want to show you my team as well. So let's get in touch.
Okay. Okay. Now I'll send you a message. Probably Friday. I might be free. All right.
No worries. If
Thanks.
not, I'll follow up with you next week too.
Okay.
Thank you, Wesley.
All right. Thanks.
Okay.
Right, thanks.
Okay. And, thanks for joining at this late time, by the way. Okay. Bye. Thanks, Shine. Have a good one. Thanks for joining again. I know you have been in and out, but hope you guys enjoy, and love to chat more of you guys.
Absolutely, Howard. Hey, I want to let you know I passed along your meetup group contact info to a friend. He's a young guy, and he's pretty passionate about real estate investing and stuff. And he kind of bounces between Canada and US, and he's not sure where to go. And I explained to him like some of the stuff that you've taught us about US versus Canada, cash flow versus appreciation, those types of things. So hopefully he dials into your seminars.
All right. Thanks so much. Thanks for passing the word. If not, at least he can join us one of the Zoom call, and then well, not putting a face on the image, but at least putting a voice to the ears.
Yeah, absolutely.
Thanks for joining, Shine. And how's work?
Yeah, no, work is all right. I got tennis elbow, so I'm slow on the computer, man. Like, have you ever had tennis elbow?
Oh, is it like it's basically if you be working too much on the table, then you hurting on here? Is it basically?
Yeah, but I got it in a different way. I got it in a worse way. I got it from holding my daughter's car seat. She's like 3 months old, right? She's a newborn. You remember your kids when they were in those baby car seats? Do you have to carry them? So I was holding that and carrying it through the mall, and I was holding it for too long. And so basically, yeah, my arm is all swollen, and it's quite a bit. It's pretty painful if you ever get it.
Well, no, I guess I never get it. So
and hopefully you never do. Your kid is older now, so you don't have to carry her car seat.
No, like just carry her 30 pounds now. It sounds like you having fun time with family. Enjoy the time before the wind hits.
Yeah, absolutely. How's things with you?
It's going good. Just finished the refinance. We shouldn't talk all this, but we are ready to do the second project. We have investor buy-ins, and we're going to go on the second project, and we're raising more capital, of course.
Good. So you did the refinance on your existing properties, so that you free up cash to go purchase the next one, right?
Yeah, with that, but we're getting about $1 million worth of capital, so we can buy bigger.
Awesome. That's awesome. So that would be your down payment for the next place?
That would be the down payment for the next place. Yeah, you got it.
And then did you end up selling the Winnipeg places to free up some cash, or you still have those ones?
I sell 2, but there's 2 other ones that are still waiting. Let me know if you want to buy them.
Yeah, no, that's awesome. And then I guess right now you guys were talking about, cash flow, and I understand the importance of all that, and then how it relates to Canadian market. What kind of appreciation are you getting then in the US properties that you buy? Like we know that, Vancouver, I think, has a 10% appreciation, which is unheard of, right? But they seem to have had that over the bull run that happened over the last 10 years. What kind of appreciation do you expect to see in Ohio and the markets that you're investing in?
You know what? That's not our appreciation in Ohio. When we invest in Ohio, it's all about cash flow, because when the question is this, it's how much cash flow in Vancouver?
Oh, negative, probably.
Yeah, so you bleeding cash. So what people will tend to forget about is when we're looking at Vancouver, yeah, you can get appreciation 2-way street, right? You can go up and go down. but you are losing money like during the holding times. So I know some people may not care if you're losing money for 1 or 2 property, but when you look at the bank, how many can you buy if you keep losing money? That's not many can you buy. So when you get qualification for the money, if that's just how we're looking at it. When we look at a company, when we're trying to tell the investors, you're gonna get money from day one. There's nothing you can do in Vancouver because you can get money from day one, except you refinance every 3 months, and you cannot do that, right?
Right.
And assuming that it will keep going up, right? And that's the big if. And I don't know. There's many active apartments company that's actively. So basically, long short, if you're going to buy in Vancouver, you're probably looking at single families, right? And you're probably looking at houses. Because if you're looking at like a multi-families, 20 units or 40 units, you're talking about 50 million or something like that in Vancouver, right?
Yeah.
And for 50 millions worth, you can buy 2,000 units
Right.
in Ohio. So it's not apple to apple comparison. And also, and I don't look at appreciation because I create appreciation in when I do apartments. So we bought it 1.3 millions and we appraised at 2.15 in 18 months. So because of the work that we do, and that's not because of the market they appreciate. The market may appreciate. You know what? The market actually doesn't appreciate for the last 2 years in Ohio. The appreciation that I just explained to you is because of the management team that we do the work and increase the rent. You go for my boot camp. You know what I'm talking about appreciation.
Yeah.
Right?
Yeah. Absolutely. Yeah.
It's not about
basically with the cap rate, and then the value added, and then
it's not about the market. The market doesn't do shit to us. We appreciate the property. Yeah.
Right. Yeah. No, that makes sense. And then so that's good. And then so right now you're probably just doing lots of underwriting and looking at what's out there and networking with brokers and stuff, right?
So deals is always coming, but honestly, between you and I don't want to buy it right now. I can buy it right now. The buying opportunity is in the Q1 and Q2, and that's why we're busy raising capital right now. So the goal is to raise to $1 million, and that's why I think I even told you we are raising capital at up to 15% 5-year hold, and then a simple interest. And so if you're interested, let me know. And me and my management team, who consists of 2 gentlemen. One is a guy used to manage 10,000 unit in the big organizations. So he had that kind of experience coming to the management team. And the other one is is a 40 years veteran in real estate. And between 3 of us, and that's why we are so confident we're going to be raising the first millions. And we already have about 40%. We have about 400K right now. So so between now and the end of the year, we're gonna raise the rest, and I have a few gentlemen that's showing interest that we just need to show them what is our experience, and that is something that's really optimistic in between the management team.
So with the investors that are investing, they're getting they're essentially quote unquote fixed rate of return, right? But they're not getting like any equity. They're not getting ownership of the thing, right? They're getting a return on investment, right?
They're getting 15%, period.
Yeah. So like a flat rate, right?
They're getting flat rate, and the reason I look at this is, if you look at like company that's big, they give in between 5 to 7, like fixed rate, and you're looking at if you're talking RSP, talk about 8 to 10% fixed. Yeah. And if you're talking about bond rates, and that's that is stupid. And if you're talking about private money, and that's basically that we are in that range. And they usually then, when you talk, it's basically, you can think about that, it's kind of borrowing the money and invest, and you get a fixed return back by the physical asset, by the revenue, and also you're entitled with that particular asset. So so you're not getting a shares with that, because you're not, as an investor, you're not really on the management team. But we were talking to an investors that have $1 million to invest, and he's definitely getting something in terms of ownership. So that's if we're talking investors to have that kind of war chest, then we are more flexible. Right. So I see what you're saying. Yeah. So you guys are the asset management team. If the investor is putting up lots of capital, then obviously they get ownership in it. But the ones that just do the 50,000 or 100,000, they're getting their return on investment, and then at the end they get their principal back, and they've made their principal and their return on investment. Yeah, look at that 5 years. You're right on that. Look at that, Shine's 5 years. You're getting 75K, right?
Yeah.
And then I'm talking about I'm talking about 100,000 investment, and then you get 75K back, and then you get your 100,000 back. That is pretty sweet in terms of like, how much can you get on that 15%, but simple interest, and that, don't bear in mind that that's not compound interest.
Right. And I mean, there's not too many investments that could give you compound interest anyways. Like, if I think about it, if you buy a stock, you get the appreciation if the stock goes up, and you get the dividend. And the dividend is paid. Is it compound? It's not compound, is it?
Well, if they pay you, that's not compound, right? But in our case, I would even say that 15% is pretty rare, like straight, number one. But you have to bear in mind that we only paid at the 5-year hold, like at the end of that, like meaning 75K, boom. And if you want to get like cash flow, then it's going to be 7 and 5. So if you want to get cash flow part, it's going to be total of 12 because you want to cash flow. So we basically we're working on different tiers, but basically right now is the 12% with the 7 and 5 if you want to get a cash flow, or the 15% if you want to hold for the whole 5 year.
Oh, so the 15% is if you stay in for 5 years and you don't get a return every year. You just wait till the end of 5 years.
Yeah, there's a 5-year hold, and then you get the 75 at the end of 5 years. Yeah.
Right. Oh yeah. Okay. Oh, so you've added some options, right? Because originally it was 7 and 5, and now it's hey, if you don't want 7 and 5, we could do 15 at the end of 5 years.
Yeah, and that's all because of like I have a couple of gentlemen that have years, actually decades of real estate experience that come from like management, and then when they own thousand units and managing thousand units, they have a little bit more options on how they do it. And that's why I always stress it to you, Shine, is like it's all about the management team, that experience. And I'm really fortunate to partner with some of those guys. But if you wanted more information, then I'll be happy to introduce you to the rest of the guys, and we can chat more. Hopefully get you invest.
Yeah. I mean, I think for me, sometimes I weigh it against, I know that single family homes and stuff in Calgary, like you say, don't do a lot of cash flow, maybe $100, $200 here, or whatever. But when you take the fact that you get the mortgage pay down, you get the $100 or $200 of cash flow per month or whatever it is, and then you take Calgary, like Calgary, for example, but Calgary's appreciation rate over the last 75 years is, I think, 3.5%. It's not a lot, right? That's relatively small. So when you add all that up, the biggest one is the mortgage pay down. And with the mortgage, when you add all that up, you're looking at like a 20% return on your down payment.
So when you invest,
sorry?
You got it right. When you're looking at single families, you definitely not going to make money from year 2 or 5. You're going to make money in 10, 15, 12 years. And that's how you're going to get all your money.
Yeah, I guess, but even if you look at the return on investment, even like in the first year, just because of the mortgage pay down, that's probably the biggest return on investment is the mortgage pay down. And so that the mortgage pay down alone is like a 15% return on investment. Then you add in your appreciation, which is 3.5% in Calgary. And then you add in cash flow. If you got $200, $300, whatever you can get, basement suite, whatever. And then, so in total, you look at like probably 20% return on investment.
And don't forget that you're also working for yourself as well, right? You're paying that, otherwise you're paying someone for the property management company. Then that's how some of the returns get eroded. And also, if you qualify for your houses, then you're also putting your own strength to the bank. And when you're investing passively, you don't have to do anything. You just write a cash flow check, and that's it.
Yeah, you're right. So essentially, that's right. If you're buying your own house here, let's say, then you're right. You have to actually use your own credit. So you go to the bank, they give you a loan, then that cuts into how many loans you can get in the future, right?
That's a wall, right? I was talking to a guy, I'm trying to partner with him, and he said that he have many investors and basically have already 3 to 10 properties. And it's not saying that you can still buy, but it's just getting harder and harder. And plus you have to do, the biggest thing is you have to manage, and biggest thing you have to buy right. You have to know what you're doing. And a lot of investors able to do that, but eventually you're going to hit the wall, right? And That's where that and we say that what, if you need someone to buy single families, this is funny things. I never say that before, and I will say it to you because I know what you buy. I have a guy that is actually my partner as well. He have a licensed realtor, and he also able to help you to find those properties if you ever need one anyway. And he's a group, and but that's just auxiliaries. That's like, if you really want to invest in Calgary, and and we respect that, because traditionally, remember that I always say that don't do it. But what I find is a lot of investors, you cannot sway investor if he or she is like so in tune with something. You cannot really, like, and the thing is, like, everything make money is at the end of the day is providing what the investor think is good for them. And that's that we
and it's not that I'm not stuck on Calgary per se. Like I think because I'm young, I still like to have like ownership. You know what I mean? Like you mentioned, like the person who puts in like a million or whatever, they get the ownership. And then, I think what you guys propose is probably good. Like, let's say for my dad, for example, like he's old, he's in his 70s, you know what I mean? And so I think when he invests, he doesn't like to be the doer. Like, I even get that. Right now he has a condo which he rents out in Calgary. And whenever the tenant calls, he kind of has this sad look on his face because it's another thing for him to do. When you're 70, you don't want to be doing stuff. You want to just be you want to be investing your capital and getting a return. You just want to be able to see a check every year. You know what I mean?
And exactly, like, that's a different time for different investor. And that's why we say, what, you may not want to invest now, but what, let's talk in the next year, and let's talk the year after. And that's why I partner with all these guys that, what, that's one thing that I learned. Like, that's the no is not forever. It means that, let's talk in the 6 months, let's talk in the year. Because our situation changes, and talk about myself, like 6 months ago, I don't even know that I can tell you that, invest in Calgary and I have someone to help you, or I have a team that able to do the things that I wouldn't be able to do before. Yeah, so it's definitely, so yeah, keep in touch if you need any help in Calgary, or buying your own home or in real estate. Let me know. It's not something that obviously I don't talk a lot, but my partners, he is specialized on that, and he can help you with that. But if you also want to talk about passive investing and learn more about, investing in the next project, let's get in touch, and let's get on Zoom call with my management team.
For sure.
Well, very nice talking to you, Shine.
Sounds good. Okay. Thanks, Howard.
Thanks, Shine. And happy Wednesday. Talk soon.
Thanks, man.
Thanks, man. Okay.
Bye for now.
Bye.